Hello, Steve from YOUvolution Learning, and welcome to this video on bookkeeping transactions, task 10, and we're going to take a look at practice assessment 1 from the AAT's website. So, task 10 in the bookkeeping transaction exam is the joint worst performing task in the exam, along with task 7. So be sure to watch the videos on task 7 as well. Now, task 10 is a tricky area. The examiner's report shows us, as we can see here, we've got 68% of students will pass this task and 32% students who won't. Now, when it comes to this task, I'm just going to show you here. So when it comes to the grading here, you can see this is where a student is passing. So anything on this side here is a pass. So we've got met and exceeded. But anything on this side here is where, unfortunately, we're failing. Now, if you are a student and you're within this borderline area here, you're only looking at around about 2 extra marks to get you from borderline to met. And in some cases, it might only be the 1 mark. Now, if you're one of the students who are struggling and finding yourselves in the below requirement stage, in order for you to get to met, you're looking at maybe 4 marks. Now those are areas where we can easily increase. We can easily find those extra 2 marks or those extra 4 marks. But even if you're in the below requirement stage, it's not just a case of I need to find 4 marks. Let's just take a little bit of a step. Let's find an extra 2 marks, build our confidence, and then find another 2 marks to get us into that pass range for 70% of this task. So what I'm going to do is go through some of the key points that the examiner has said in their examiner's report, and then I'll break this task down so it's really easy for you to manage this task when you come to tackle it in the real exam. So the examiner tells us that this area, so task 10, is looking at learning outcome 1, which is understand the financial transactions within a bookkeeping system. Now, they tell us that there are some strengths that the students are demonstrating in this task. So they're probably strengths that you're showing as well. So classify items as assets or liabilities, and classify items as capital or revenue income or expenditure. So they're the strengths. But that doesn't mean that you rest when it comes to your revision on those areas. It just makes sure that those are areas where students generally show they are competent. So you're still going to make sure that you're still revising those areas as well. But they also let us know where some of those weaknesses are as well, or the main weaknesses are in this task. So the first one is the inability to recognize how specific accounting records relate to the double entry bookkeeping system. And that's something we will look at in this task. Also, failure to produce customer and supplier account codes that are consistent with the information provided. That's quite a surprising one, and again, we'll look at that when we break down this task as well, and how to make sure we can really get the marks available for that part of the task right. Because in the task, especially when it comes to the account codes, the people that write the exam questions, they provide you all the information you need in order to be able to get those right. And also incorrectly calculating the accounting equation. That accounting equation, I cannot stress enough how fundamental that is for you to understand, because not only does that help you with bookkeeping transactions, it will also help you with bookkeeping controls, accounts preparation at advanced bookkeeping at level 3, final accounts preparation at level 3 as well. It will also help you when you come to level 4 in your financial statements of limited companies as well. So understanding the accounting equation and getting it right at this foundational level is so important. So the examiner tells us that there are areas that students struggle with. So when you're creating your revision plan, you've got to make sure that you are spending good quality time on those areas and beginning to master those. Now I'm going to go through this task now. So I'm going to go through this task now. I'm going to break it down for you and make it really easy for you to manage and approach. Okay, so let's take a look at this first part of the task. So task 10, we're going to take a look at part A to begin with. So the first part of the task is covering learning outcome 1.3, which is demonstrating understanding of a coding system. Now in particular, this is looking at the different types of code. So this one is looking at customer account codes, but you could also be faced with a supplier account, a product code, and also how to create the codes, like alphabetical, numerical, and alphanumerical. And we'll see in a second that this one, is looking at alphanumerical. So let's read through the task together. So it says a new business has allocated a customer account code to each customer in the sales ledger as shown below. And that's this list here. The code is made up of the first 4 letters of a customer's name. So the first 4 letters of a customer's name, followed by the number of the ledger page allocated to each customer in the alphabetical group. So if we have, for example, you can see here we've got Aspen Limited, so that's ASPE, the first 4 letters of its account name, and then 01, which is the first page, because that's the first customer with A. Then we've got Atwood Limited, so that's the second customer that we have with A, so therefore that's the second page that we have in our ledger. And their account code is ATTW02. So again, the first 4 letters of their account name, and then it's because it's the second A, it's then 02. So you can see here we've got 02 and 01. Now there are different account styles. There are different numerical coding systems that we can have. First of all, we've got numerical. So this is mainly used for coding documents such as invoices, delivery notes, purchase orders, etc. And it will be sequenced in numerical order. So for example, 0001, 0002, 3, 4, 5, etc, etc. So their numerical codes are normally used for things like documents, invoices, delivery notes, purchase orders, things like that. So we've also got alphabetical as well. Now, alphabetical are mainly used for documents relating to businesses, such as for customer files. So if we've got a new customer, we'll have their credit application form in there. We'll have their customer account application in there as well. And that will be filed alphabetically. So we could just go to, say, for example, we want to go and have a look at Aspen Limited. We just go to A and we'll see that Aspen. We'll just go to A and we'll see that Aspen Limited is there. But it's also used for supplier files for the same reason, but we could also use it for insurance documents as well. And all of these documents will be filed by business name, so in alphabetical order, so it makes it really easy for us to find. And then the final one that you get tested in this account, and the final one that you get tested in this exam is alphanumerical, and that's what we're going to look at in this task today. So this is mainly used for customer and supplier accounts in an accounting system, and will be formed, as you can see here, from both letters and numbers, which helps to distinguish between lots of customers and suppliers that we might have that all begin with a similar, that all begin with the same alphabetical name. Alphanumerical could also be used for product codes as well, because we could distinguish, we could say cookies could be CO and then 001, CO002. Biscuits could be BI 001, 002, and so on. Now in this task, as I was saying, we're looking at alphanumerical because we can see it's made up of both alphabetical and numerical data. Now it says here in the task, the 2 new customer accounts shown below have been added to the sales ledger and need to be allocated a customer account code. So remember, when we're first looking at this, it's going to be the first 4 letters of their name, so for each of these, and then the number will be whatever page they're on in terms of the ledgers that we've got. So let's take a look at Hearthstone PLC. When we look down our list, we've got Aspen, Atwood, we've got Dunstan Designs, Genie Products, Laughton Limited, Pemberton Limited, and Penn Limited. You can see we don't have any H there at all. So this is the first customer with an H. So therefore, their customer account code is going to be HART01, because that's the first H that we have in our list of customers. So that's the code, nice and straightforward. First 4 letters, and then because it's the first one with an H, it just becomes 01. Now when we look at Parker Printing, we can see from the list we've got Pemberton Limited, which is PEMB01. We've also got Penn Limited, which is PENN02, because it's the second one in the P's. So Parker Limited, Parker Printing, sorry, is the third ledger that begins with a P. So again, we're going to use the first four letters. So P-A-R-K, P-A-R. So we're going to use the first four letters. So P-A-R-K. And because this is the third customer with a P, so that's the third P ledger, it's going to be 03 for this one. So as we can see, the examiner was saying this is one of those areas that students really struggle with in terms of getting the customer account codes correct. But we can see from what we've read from the question that it tells us that it's made up of the first four letters of the account name and then the ledger page number. And then we just use the information that we've got in the task to understand how that ledger page system, numbering system, is working. So we saw from the information provided with us, we've got Aspen Limited and Atwood Limited. So Aspen was ASPE01, and then Atwood, because it's the second A, it's got ATTW02. And then we just follow that sequence then when we're looking at the accounts that we're provided with in this task. Okay, so that's part A. Now let's take a look at part B then. Now this is looking at learning outcomes 1.2 and 1.4. Now learning outcome 1.2 is distinguish between prompt payment, trade and bulk discounts. And learning outcome 1.4 is demonstrating understanding of the process of recording financial transactions. Now this part of the task is testing if you can distinguish between the different types of accounts, discounts that are being offered. But I'm going to show you how we think about when we do offer a discount, what sort of process happens in terms of the process of recording the financial transaction for a discount. So the task says one customer has been offered a prompt payment discount for payment within 10 days. And it says show what two actions should be taken if the customer takes the discount and pays within 10 days. So the actions that we've got are record the amount received in the cash book and ledgers, change the amount of the original invoice, issue a new invoice for the amount paid, and issue a credit note for the discount taken plus VAT. Now there is a process that when a discount is offered and a discount is taken, there is a process that happens. So I'm just going to run through that process now. The first one is we receive the payment. That payment is then entered into the relevant daybooks and ledgers. Once it's entered into the relevant daybooks and ledgers, we then create the credit note for the discount, for the prompt payment discount, and this is entered into the relevant daybooks and ledgers as well. Then once that's happened, the daybooks have been updated, the credit note's been raised, the daybook has been updated. The payment that we received is then reconciled in the general and sales ledgers. So that's pretty much the process. When a customer takes us discount, we receive that payment from them, we put it into our cash book. We've seen that they've taken prompt payment discount, so then we need to raise a credit note for that discount, and that gets entered into the discounts allowed daybook. And then once that's happened, we then process those daybooks into our general ledger and sales ledgers as well. That's the process. So when we look back at what the actions that they give us are, the first one says, record the amount received in the cash book and ledgers. Well, that's the very first step that we take. We have that payment, we record it in our cash book, and then we post that cash book into our general ledgers. So that is definitely going to be one of our actions. The next action says change the amount on the original invoice. Now we can't do that. One, it's not part of this process. We don't do anything with the invoices at this stage because we've already raised the invoice back 30 days ago or 10 days ago in this case here. So we're not going to change that invoice because then we're kind of falsifying our invoices really. and HMRC won't look good on that. The auditors won't look good on that as well. And that's kind of looking, you know, we're falsifying those original documents, and we shouldn't be changing original documents. So that one is definitely a no-no. Now the next one is kind of similar. It says issue a new invoice for the amount paid. Well, we don't need to do that, and it's also not in compliance with the prompt payment discount rules as well. The AATs, the rule that the AAT use in their exams is when a discount is taken, we don't amend the invoice whatsoever, we just raise a credit note for that discount. So again, option 3, issue a new invoice for the amount paid, again, is absolutely not the right process to follow. So that leaves us with the last one. Well, we need to pick 2, so process of elimination, then it has to be this final one. It says issue a credit note for the discount taken plus VAT. And when we looked at the process, that was the second process that we're looking at. A credit note is generated, it's entered into the daybooks, and then it's processed through the ledgers. So absolutely, that is the second one. So when you are revising for questions like this, have a think about the process that you follow when you raise an invoice or when payment is received. What happens? And just make it like a little flow chart, like I've done here. Now, if you listen to this on the podcast, make sure you have a look at the blog, or you take a look at the YouTube video as well, so you can see how that looks. But it's kind of, the payment is received, we then enter that into the relevant daybooks and process that to the ledgers. We then raise the credit note, we enter that into the daybooks, and then we process all of those into the ledgers. Okay, so we reconcile and process the ledgers. So that's the process. But each time you carry out any sort of transaction, even with petty cash, cash books, suppliers invoices, customer invoices, just make a note of that process that you're following, and that will help you with these sort of tasks. Okay. So let's take a look at part C now. So this is looking at learning outcome 1.4. This is demonstrating an understanding of the process of recording financial transactions. And this part of the task is testing in particular the calculation of assets, liabilities and capital, and the dual effect of transactions as well. So the activity, the task is saying the business has the following assets and liabilities, and it provides us with a table with a list of assets and liabilities and the values, but it doesn't tell us which ones are assets and which ones are liabilities. It doesn't give us a clue by giving us debits and credits. It's just a list of accounts and a list of values. And the question specifically says, show the accounting equation by inserting the appropriate figures and enter all figures as positive values. So this is asking us to do the accounting equation. So we need to know what the accounting equation is. And as I said at the beginning of the video, understanding the accounting equation will help you throughout your AAT studies and beyond. But before we get stuck into the accounting equation, we have a list of accounts here, and we need to make sure that we know which ones are assets and which ones are liabilities, so we know how to put them into the accounting equation. Now, I've just got a table on the screen here, as you can see, and I'm just going to go through each of the list. So the list consists of premises, loan from bank, cash at bank. We've also got furniture and fittings, amounts owing to credit suppliers, and amounts owing to credit customers as well. So that's the list. So I'm just going to number those 1, 2, 3, 4, 5, and 6, and then add them into this table. So the first one is premises. So these are the buildings that the business owns. Now, even if they have a mortgage on this premises, the premises itself is the asset. The mortgage on the premises, that's what's going to be the liability. But it hasn't said the mortgage on the premises. It's just given us premises. So the premises is the asset, and the value of that is £115,000. So on my list, I've just got number 1, and then I've got asset and liability as columns, and the first one I've just put 115,000 in the asset column, because premises is what the business owns. The next one is a loan from the bank. So the bank has given this to us as a business, and then we're obviously using that for what we need it for, but we need to pay that back to the bank. So the loan from the bank is going to be a liability because it's something that the business owns back to the bank. So on row number 2, under the liabilities column, I'm just going to put £45,000. That's how much the loan is from the bank. The next one is the cash at bank. So when we've got cash in the bank, that's the businesses, and we own that, and we're going to use that for the business's benefit. So things like paying wages and paying suppliers and stuff like that. But that money in the bank, that cash at bank, is the businesses. So we can use that for whatever we need to use it for. So cash at bank is an asset. So in row 3, I'm just going to put 11,433 in the asset column. So next we have furniture and fittings. So these are our desks, our chairs, tables, boardroom tables and things like that. So that's, again, these are things that the business owns. They use those to help everybody to work, and therefore it becomes an asset, something that the business is using for its own benefit. So furniture and fittings, that's number 4, and again that's an asset. So 12,392 will appear in the assets column. Now the next one we have is amounts owing to credit suppliers. The next one we have is amounts owing to credit suppliers. Now there's a couple of clues in this one. It says here that it's amounts owing to credit suppliers. So owing to says it's something that the business owes out. Anything that we owe out is a liability. But it also says to credit suppliers as well. And credit suppliers are obviously people that we need to pay. So again, there's 2 clues there that tell us that this is a liability. Now this is one of the things that the examiner said that students are strong in, is identifying these as assets and liabilities. So credit suppliers, so row number 4 is a liability because we owe that to our suppliers. So that's going to be 22,396 in the liability column on row 5. So row 6 is the amount owing from credit customers. And again, we've got clues there that help us. We've got amounts owing from credit customers, and it tells us that they're credit customers. So when businesses owe us something, like our credit customers do, then that's an asset to the business. It's something that we're going to receive in the future, and it's going to be a benefit to the business. So that is an asset. So on row 6, we're just going to write under asset column £14,224. So now what we need to do, once we've split those out into the different columns, we've used our understanding of account types, and we've thought about each one of those individually, and we broke them down into the columns. So when you're doing this in the exam, I would advise you just write out the column as you can see. Again, if you're on the podcast, check out the video so you can see that, or have a look at the blog and you'll see it in there as well. But we've broken that down into asset and liability columns, and then for each of those figures we've just separated them out, so then we know that what each of them are. So all we need to do now is just add them up. So all we need to do now is just add them up, 115,000, and then we're going to add the next asset, which is 11433, the next asset 12,392, and then the final asset of 14,224, and that gives us a total of our assets of £153,049. So then we just do the same for the liabilities, 45,000. We're going to add 22,396. That's our 2 liabilities, and that comes up with 67,396. Okay, so that breaks that question down. So now we've got the totals of the assets and the totals of the liabilities. So in the question, it gives us a box to put at the value of assets and the value of liabilities in. So I'm just going to put assets 153,049 for the asset total, and then for the liabilities total, it's going to be 67,396. Now this is where we've done this now. We've entered the figures in, and this is where we need to make sure we understand the accounting equation. Now the accounting equation at level 2 in its simplest form is assets minus liabilities are equal to capital. The way that I try to remember that is always looking for competent, so A, L, and C. So assets minus those liabilities equals capital, which is the owner's share in the business. Okay, so if we just do 153,049, and we take off the liabilities, so stuff that we owe out, and that gives us a capital value of 85,653. Okay, so that's that question, and the key things from this one are making sure, one, you know what assets and liabilities are. Assets are something that the business owns or can use for future benefits, and liabilities are what the business owes out, so things that we owe back to other people like the bank or to suppliers. And then the accounting equation is assets minus liabilities are equal to capital. And if you want to remember the order, it's always looking for competent. All right, so that's part C. So let's take a look now at part D. So again, this is looking at learning outcome 1.4, which is demonstrate an understanding of the process of recording financial transactions. And this part of the task is testing in particular the classification of income and expenditure. So we've got capital income and expenditure, and we've got revenue income and expenditure. And again, this is an area that the examiner has said was a strength of students. So you're probably going to find that you're okay with this one, but if you're not, I'll talk through it with you anyway, and we'll break it down so it's a lot easier for us to tackle. Now, the question says the transactions below have taken place. So the actual task is show whether each transaction will be classified as capital expenditure, capital income, revenue expenditure, or revenue income by placing the appropriate classification against each transaction in the table below. And you can use each classification more than once. So it gives us a table, and we have a list of 5 different transactions, and then we've got options to choose from capital expenditure, capital income, revenue expenditure, and revenue income. And in the task, we just need to click and drag these into the right position. So the first transaction is purchase. So before we get into the task, we've got to make sure we understand what capital and revenue mean and what income and expenditure actually mean. So capital transactions are those irregular, longer term transactions. So stuff that isn't happening on a regular basis, stuff that we only expect to happen on the odd occasion, and they're generally things like purchasing or selling assets, or when the owner puts new assets into the business, so stuff like more money into the business, or if they're putting more equipment that they own into the business. So it's those more likely, those irregular, one-off, long-term sort of transactions. That's what capital is. Whereas revenue is those regular day-to-day transactions, so things like sales, purchases, expenses. Those are the things that are happening on a regular basis. You know, if we're charging rent to somebody, then we get paid every month, so therefore that becomes a regular transaction throughout the financial year. And if we're obviously paying our rent as an expense, again, that's a regular transaction that's happening every month throughout the year. So let's take a look at each of these transactions and break them down into whether we believe they're capital or revenue transactions, and then we can determine whether it's expenditure, something that we're paying out, or income, something that we're receiving as a business. So the first one says purchased motor van for the delivery of goods. So this is something that's not going to happen on a regular basis. We're not going to be buying new vans all the time. You know, we buy a van and we use it in the business until we can't use it anymore, and then we'll get a new one. So that becomes a capital transaction because it's irregular and it's an investment in the business. It's a longer term transaction. But also it says here that we've purchased the motor van, so we know that that's expenditure. So that makes it capital expenditure. Okay, so the next transaction says purchased stationery for the use in the office. Now again, we know it's expenditure because it's told us it's purchased, so that's the easy bit. That's where the question gives us the answer. Now again, is this capital or revenue? So when we're purchasing stationery for the use in the office, think about your office. How often do you purchase paper, ink for the printers? People might need pens and paper and all that sort of stuff, and that's going to be a regular day-to-day sort of transaction. It's going to happen all the time throughout the financial year, at least once a month when we make an order with the stationery company, but it could be more often as well. Who knows? So that's going to be a regular day-to-day sort of transaction, and we know it's purchase. So that means it's going to be a revenue expenditure. Next one is purchased train tickets for business travel. Again, we know it's expenditure because it's told us it's a purchase. And again, this is train tickets for business travel. Now, think about, again, if you work for an organization who have people who before the pandemic were moving around, again, that would be something that's happening on a regular basis. You know, people going out to see clients, things like that, going to see customers. So that's going to be a regular transaction. So we know it's an expenditure. We know it's a regular transaction. So therefore, is going to be a revenue transaction. So it's going to be a revenue transaction. Next one says received cash for the sales of goods. Now it tells us that we've received it, so that's income that's coming into us. And it's going to be the cash for sales of goods. And again, sales of goods are going to be happening maybe every day. So that's definitely going to be a regular day-to-day transaction. So that's definitely going to be revenue income. Again, so it tells us we received it. The next one says we have received a check from the owner. Now, if we're receiving a check from the owner, again, that's going to be income because we're receiving it in. But then is this going to be capital or revenue? Well, this is a check from the owner. Now, the owner, unless the business is performing really poorly, the owner is only going to invest money back into the business when it needs it. So again, this is going to be something that's irregular, and it's for the long term of the business as well. And if they put another £10,000-20,000 into the business, that's obviously going to take them through for the next 12 months or so. So that becomes a irregular longer term transaction. So that final one, receive the check from the owner, is going to be capital income. Okay, so with this one, the keys to remember is what capital and what revenue transactions are. The income and expenditure, you should be okay with that because it kind of gives it you in the task. We've purchased, therefore it's expenditure. We've received, therefore it's income. But making sure you're okay with what capital and revenue transactions are. Okay, just to wrap up then, the examiner told us it was looking at learning outcome 1, so we looked at distinguishing between prompt payment, trade and bulk discounts. We had to understand that so that we could understand the process of recording prompt payment discounts, and we also looked at demonstrating understanding of the coding system.